Please give me some feedback. Please put plus if you hear me well. And don't forget to ask your questions while I'm broadcasting. Okay, great. Great. We will wait for 1 minute more. I will make short breaks between the blocks to answer your questions. So don't forget to ask something. Hello. I hope our previous educational stream was of great interest and you are getting closer to become professional traders. I hope so. Let's wait for 1 more minute. We have only 5 viewers. Please share with us your situations, your setups that you managed to work out this week. How was it, profitable or not? Robbie, hi. Okay, this is our plan for today. We will be talking about market phases, level building, and the main rules of level building, trading patterns, order book cluster analysis, some main scalping strategies, most common for intraday trading, and finally I will answer all your questions. I will do my best to do this. Okay. Okay, let's start with market phases. As you know, there are 3 phases according to the standard classification, namely bullish market, flat, and bearish market. When we have a bearish market, there is a strong negative background. Strong bearish market, that is what we are seeing for today, usually caused by significant fundamental factors like economic crisis or downfall, geopolitical tension, and many other fundamental factors like global pandemic, for example, that in turn caused very high inflation in US economy, that forced US government to fight it by tightening the monetary policy, increasing the rates for banks. It means in turn that loans for business are getting more expensive for different venture projects, including crypto as well, are getting more expensive. All the loans are getting more expensive. So what is the consequence? The stock market falls. Crypto market follows it as usual. This is the chain reaction. And there is a very high level of panic and fear index on the bearish market. This is the feature of bearish market. Very high probability of manipulations by huge players and spoofers, especially on futures markets. As it's much easy to manipulate the participants of the market due to high uncertainty and fear. When people are on the edge of fear, panic, and uncertainty, they are weak. They are just weak, and for huge players, it's much easy to manipulate such small players. Okay. Bearish market is characterized by small profitability, usually, when we are talking about a breakout strategy, for example, because it's harder to reach the critical mass of confident participants to push the price after the level breakout due to lack of confidence itself, as I already said. Okay, maybe you have some questions. USA are always fighting. But anyway, it usually fights efficiently. Okay. Let's move on and talk about flat. Flat market is about less negative background. When the market, and for example BTC, is inside the global range, and however the longer it lasts, the more drastic movements it brings then. It's quite simple. Okay, no questions. And finally, let's talk about bullish market. Bullish market is connected with flourishing economy, positive economic backgrounds, and when there are no geopolitical tensions, when the economies are developing, and we do not hear about upcoming recessions and so on. The greed index is high. On the bullish market, the greed index is high. The euphoria on the markets is increasing, and the instruments show very good skyrocketing movements due to the inflow of the capital from low risk markets to high risk markets, like for example crypto market. And the inflow of the capital to that market and high confidence of the crowd that pushes every instrument with more or less attractive pattern or tasty price. However, we are here to teach you to trade every market. Good trader is a flexible trader who can use different strategies and change his risk management for each market phase. Okay, I hope it's clear about the main three stages of the market. I always forget to ask, do you have public YouTube where you trade live? Yes, of course. I trade live on CScalp TV, and we are getting closer to create a new YouTube channel of Smart and Skilled, our team Smart and Skilled. So I will tell you when we will come to this. Okay. However, we already have the course, individual course, but I will tell you about it later. So let's move to the next slide. Just a moment. Another important and extremely crucial skill is to build levels properly. The cryptocurrency market is all about levels and proper level building. How to identify and build the levels properly. I will show you. Wait for a moment. I will add one more slide. I forgot to do this. Maybe while I'm preparing this slide, you have some comments, or maybe you have some questions. You are welcome. Don't forget to share your experience of the previous week. Just a moment. Do speak about setups later. Of course. We will be speaking about setups and the main patterns to how to work out different strategies. Okay, great. I will turn on this stage and show you main rules of level building as far as we are talking about levels. So there are talking about building of levels. There are three main rules to build levels properly. First of all, level is a psychological zone protected and attacked by market participants. The more visible and clear the level is, the better price works it out. If you see the level that sometimes price works out, sometimes not, you have some doubts. So it means that this is a very weak level or it's not a level at all. The level is seen for most participants and that's why it works. It's all about participants' psychology. Look at this level. I bet you don't have any doubts that this level works good because there are so many touches and this level is so clear and visible. I hope the very first factor is quite obvious. The second factor, higher than average volumes. Look at this. We have higher than average volumes each time we are, every time when price reaches the level. Just watch the volumes here. They are higher than average. As I already said, the more participants see the level, the more limit and market orders are executed when price reaches it. Many participants close positions here on the levels. Other participants place limit orders to catch a pullback from that level or the breakout on it. That's why we see increased volumes around the real, not fake level. And finally, look at this. We have long candlestick shadows, the result of the resistance. When the price reaches the level, executed limit orders push it back, making that candles. And look how it works. Look that all these three conditions are met here. We have multiple touches to the level 1, 2, 3, 4, 5. And the more touches we have, the higher probability that it will be the breakout, as we see here. The breakout and then retest, and probably the price will be going down then there. The second factor, higher than average volumes, each time the price coming to that level here and here, and we always should take into account that the fact that usually the level is not just a concrete price, it's a zone, and sometimes it's quite a wide zone. It's not very hard. So maybe you have some questions? Don't be shy. If you think that you have a stupid questions, it's not stupid if it help you to enhance your quality of trading. Okay, the third identifier of levels is what? The third, candlestick shadows. I mean that every time we are touching the level, in many cases we have long shadows. It means that the price is pushing back by limit orders placed on that level. Do you use momentum to select coins? What do you mean? You mean the character of price movement? I usually prefer watching the volatility, for example, through our CScalp screener to identify the most volatile instruments. and I place them on my working space. So let's move next. Well, as you see, it's not very hard, just have some practice and build levels. And it's very important, do not build too many levels. Intraday, we use the principle from top down, building the strongest levels of the highest time frame and several of smaller time frame, painting them with another color. Too many levels will confuse you and spoil your trading session. Okay, let's wait for some questions. Okay, great. Momentum expresses how strong an up or downtrend is. Volatility expresses the movement. It's a KPI in, for example, TradingView. Yes, I understand what you are talking about. Momentum is extremely important parameter when we are talking about high volatility, and especially when we are scalping intraday, it's extremely important when the price is ascending and descending. Okay, let's move next. Let's move to the trading patterns. Okay. Trading patterns. Are big time frame levels still active after a long time and when other big time frame levels appear? It's a good question. The level remains relevant as far as soon as the price touches it. It could be a kind of mirror level when previously it was resistance, then it's support level. It's still relevant. After time pass, we can see that this level lost all this relevance, and the new levels are forming. You will see it by seeing this quite obvious when the price can't be lower or higher a proper price level. It will be the new level, and it's especially important on the higher time frames. What's about footprint? Are CScalp developing a footprint chart? What is footprint? I notice quite a lot of time with patterns that after entry the movement goes the opposite way as shown in the target. In daily trading, how can I better recognize that? We will be talking about this in a few minutes. It's a very good question, and I answer it. So let's look at the main patterns, graphical patterns. Most of you know about them, and however, the grave mistake of beginners, it's what are you asking me, is to trade patterns alone. Indeed, many patterns are working out very well due to market psychology. Participants see these patterns and like head and shoulders, and they collectively participate, they push, and they would like to participate in the workout of this pattern. but they do not take into account big players, manipulators, market background and mood, and so on. Okay, let's move next. There are some patterns. There are some more patterns. Remember to never use patterns as the core factor of decision making. We should use patterns along with other factors like point of controls in clusters, levels, limit orders in order book, and so on. For example, we are watching the reverse point for the instrument in the end of correction to open the position along the trend. We have an uptrend movement, we have a downtrend correction, and we are watching some good point to open position along the uptrend. So we see that the correction is losing momentum. The limit orders below create support for the price and do not let it further, not let it goes down. Finally, we see head and shoulders as an additional factor, and we open position on the neckline, for example. That's how it works. We shouldn't trade naked patterns. Just see and just open the position. It's 50-50 probability to work it out. So we should use the patterns in a row with other factors of our complex analysis. Please be aware to adhere to this rule. Okay, maybe do you have some questions? Let's move further. Some more patterns, trading patterns. There are a lot of different patterns, and I bet you know most of them. There are some patterns that are more actual and more relevant for scalping. Using such patterns, we usually apply breakout strategy, waiting for consolidation inside triangle, for example, when the price is accumulating power under the level and then burst, skyrocketing with a drastic impulse. This is about breakout strategy. But all these patterns are about graphical factors, just graphical factors. Using only graphical factors, we lack confidence and additional information for us to make a decision. And that's why we should also analyze what is happening in cluster, in a market history, and the order book. Let's take a look. Let's take a look. Order book, cluster, and market history analysis. What we are seeing here, maybe point out the BTC movement also plays a big role. Usually the correlation with BTC is pretty high, so I always keep a BTC graph at hand. Yes, we will be talking about the BTC when we will be talking about the main strategies. Yes, of course, it's extremely important. BTC guide. I'm calling this a BTC guide. And it's a very good remark. We will be talking about when I will talk about two main scalping strategies. We pay attention to the following factors, while along with graphical analysis, we should understand what is happening inside the trading terminal. It's extremely important. We get and collect 80% information, not from graph. We are collecting 80% information. When I'm talking about scalping, 80% of information from the trading terminal itself, from the market activity, trading history, clusters, and order book. It's extremely important. I know several traders who are trading without graph. I swear they don't use graph at all. They use only market history, clusters, and order book. And they they say that they even do not need the graph. It's the highest level of mastery. So the first, clusters. In this part, points of control form psychological level. Previously, we were talking about points of control, and let's refresh our knowledge. Clusters are the history of market orders made by sellers and buyers. Each column of clusters, these columns, is a 5 minutes time frame, and if we see the row of point of controls like that, the point of control is the horizontal maximum volume executed on this level, and we treat this level as support or resistance level. Like that, we just shift this level to the price, and we can even build a level, graphical level on the graph, and it will be interesting what we will see. In most cases, it will be a graphic level. From the technical analysis view. Okay, if we see on the graph, the graphical level, we usually are talking about graphic level, physical level. But when we are talking about the level in clusters, the box in one row, we are talking about psychological level. So it's extremely important. For example, the price is somewhere above this level, so we treat it like a support zone. If the price is somewhere here, we treat it as a resistance zone. I think it's clear. Okay, market history. We are talking about this zone with the ticks that are describing market participants and what volumes they are entering market right now, live. Green purchases and red sales. Market activity reflects the current activity of the instrument, whether it's enough power or of market participants to break a limit order, or we should expect the pullback from it. The faster it appears, the more crazy even, I would say, the more crazy is this movement, the more activity we see on the instrument. It's quite simple. And finally, limit orders. Limit orders also represent the resistance. The third part, very important. The resistance for the price pushed by market participants, or the more limit orders is, the huger is, the more resistance the price faces. For example, there are 3 limit orders that imply the real resistance for the price. The price won't go higher because this is too much resistance. The market buyers will have to execute all these limit orders of sellers to break them. However, at the current stage, the market buyers are too weak to do this. That's why probably it will be the reversal point. It will be pulled back from these limit orders. Okay, and another important thing, this zone, please pay attention. In yellow zone, accumulated volume, and here we see delta, green and red. Let's start with yellow clusters. Accumulated volume shows us the sum of contracts executed within 5 minutes, just the absolute volume of buyers and sellers as an indicator of market activity. The delta below green and red is the difference, quite simple. By the accumulative volume, we judge the activity of the instrument and see whether one or another limit order like that withstand the pressure of buyers or sellers or not. For example, we have 1 million contracts in those 3 limit orders, and we have, for example, 100 contracts executed within each 5 minutes. About 100 here, 100 previous 5 minutes, 100 or 150 contracts earlier, and we analyze that the market executes about 300 contracts within 1, 2, 3, 15 minutes. Here we have 1 million. How much time it will take to erode these limit orders? It's quite big, yes, and it will be very difficult for market buyers to erode this, to execute this. So all the crowd see this, all the participants see this and understand. And the psychology is that they are changing their position. They are turning from buyers to sellers, and the price is rebounding from this point. Okay, I think it's clear. By the delta, we see who is gaining momentum, sellers or buyers. When the delta is changing color from, for example, green to red or vice versa, ideally it's a sign of local reverse. We just see who is winning. For example, within these 5 minutes, we see red delta, and then it's becoming green. It means that within these 5 minutes, buyers are stronger. Okay, I think it's clear. We don't see your cursor. I think it's not a problem because I have marked all these parts, all the elements. For example, when I was talking about the clusters, the fourth element, I think you see that the yellow one is about accumulative, and the green and red below it, it's about market delta. Is it clear? I hope, or if not, please ask your questions. I will try to answer and make it maximum clear. Yes, it will be available. The stream will be saved, and you will be able to watch it again. Ebo, thank you. You will be able to watch it later. Where can I send you a print screen to show you what I will say about footprint? You will find some contacts under this video in the description. Okay, and you can directly send it to me in Telegram or RiPol or RIPOL. Okay, I hope it's clear. So the most important part, let's move to the main strategies. Or do you maybe have some questions? Let's see. Okay, how we should apply the most popular scalping strategies? Breakouts and pullbacks. There are much more scalping strategies, but there are most profitable and most popular. You will be able to find such situations every trading session. I mean, I think 90% of scalpers, frankly speaking, they are trading breakouts and sometimes pullbacks. Breakouts and pullbacks. The mechanics is quite simple. I just have already said. In case of huge activity of market participants, the limit orders placed on the level or just a level without limit orders is broken under the pressure of market participants. In that case, we apply breakout strategy, catching the impulse caused by the market participants, and the breakout, the impulse itself. Just a moment. The impulse itself usually caused by stop losses execution. For example, we have such a situation that you see on the upper right corner when the price is trading inside the consolidation. We have several touches, 1, 2, 3, 4, and fifth touch provokes the strong impulse. Why it's happening? All that range is about market effectivity, efficiency, because when we have a range, it means that the demand more or less equals to supply. And finally, a third party, for example, unknown market participant appears that changes this situation by just opening long or short position by the market, much more that makes imbalance and price goes higher or lower, and it breaks the level where the liquidity of huge mass of stop orders are located, and all these stop orders are accelerating the movement. That's why we usually should find the zones with the extreme high liquidity pools. Like we should understand that below such level there are a lot of stop losses. There are a lot of stop orders of buyers who buy from this point. They buy from this point, placing their stop losses here. And then these stop losses will be the real fuel for this price skyrocketing. So the most important rules for breakout: first of all, 2-3 touches to the strong level. First and second is never cause breakout. Usually after first and second touch, we usually use level pullback when we are entering the market from this level or from this level. The third touch already increases the probability of breakout. From the third touch, we should wait the breakout of the level. And okay, we are waiting for 2-3 touches to the strong level. Then we watch BTC guide, as someone already mentioned this moment, and it's extremely important. BTC should coincide with the breakout direction. If we are waiting short breakout, we should be aware that the BTC is going down. If it's pumping, I do not recommend watching downfall breakouts. It's extremely dangerous because all the most altcoins are following BTC. There are very rarely instruments that are stronger than the market, stronger than BTC. For example, there are some very rare cases like GMT in the moment of the update that was pumping while BTC was falling. Anyway, it's quite dangerous. We should understand that BTC should coincide with the breakout direction. And finally, high activity before the level. We should understand and watch the activity in market trading history. All that red and green ticks, the more activity in this zone, all these ticks should be appearing very, very fast. It means that the market participants are getting more active, and we are on the edge of breakout. We should enter by the market or with a limit order before the breakout appears. When the price crosses this level, it's too late for us. We should better miss this situation because it will be very, very rapid and drastic. Okay, what about? I think it's quite clear. We will talk about this in more details with different examples on the next stream, during the next stream. Okay, let's talk about level pullback. Level pullback is the opposite situation when we have, for example, the first touch or second touch to the very strong level, and we see the lowering of the activity after level touch. When the price reaches this level, we see that in trading market history, we see that the activity is going down. All that ticks are lowering. The speed of appearance is going down, and it means that market participants lack power. And finally, we should find the rows of point of controls in clusters or huge limit orders somewhere here. For example, somewhere here in order book, on the place where the price is reversing. It will be a kind of resistance for movement continuation. And that's how it works. It will bring less profit than rather than breakout. However, this strategy is much more is not such a risky strategy because we always know where to put stop loss. We in first case, in a level breakout, we use mathematical stop loss because when we are entering the market, the trade, waiting for the breakout, we don't know where to put this stop loss, and we usually, I recommend, put mathematical stop loss. I previously during the previous stream, I already showed how to use the ruler, and using this ruler, we should place stop order on 0.5 or 1.5% stop loss from the price, from the point of from the entry point, while we use level breakout. But when we use level pullback strategy, we usually find something reliable from which price is pulling back, like level with a huge limit order on it, and we can place the order, our stop loss order, under or below, behind this limit order, just to protect our stop loss. And even if the price goes against us, and after eroding the half of this resistance, we should manually close the position. It's much more safe for our deposit. So the level pullback brings less profit, and simultaneously this strategy is less risky. And finally, I forgot to say, when we are using level breakout, we should pay great attention to the time of execution, the time of realization of this movement. If we have many touches to the level, and finally we are breaking this level, and we are waiting for 10 to 40 seconds, and if there is no any drastic movement, we should close the position, because it means that there is a lack of liquidity, lack of those stop orders to execute them and to boost the price. It means that even if the breakout will be held, will be worked out, it's usually occurred by the psychology of the crowd, but not by the technical reasons, like this liquidity grab, the execution of limit orders. But we only should enter those strategies where we can see the technical execution of this, the technical workout of this situation, when we have drastic impulse from the very first seconds. If we do not have such impulse during 30-40 seconds, we should at least close half the position or close all the position, because it's quite risky. The price could roll in and you will bear losses. Okay, I think it's quite simple and clear. And let's move next to the final part. Your questions. I will answer your questions, all that you have. Anyway, this stream will be available you will be able to watch it again. So I hope it was useful and of great interest. As I said, next time we will be trading. We will be selecting the most volatile instruments from the CScalp screener. Then we will be building levels. All that we are talking about today will be then we will be making some technical analysis, and we will conduct analysis of clusters, limit orders in order book, and I will try to find some situations for scalping to work it out. So we will try to trade together, and you are just one stream before becoming the real traders and scalpers. All you have to do is just to practice as much as you can. Please write your questions. And if you do not have questions, we will be finishing our today's stream. I will wait for several minutes. Please give some feedback. Was it clear, or you have some unclear moments? Okay, if you do not have any questions, thank you, Renzo. Have a nice weekend. You too. Doros, thanks a lot. So I will be happy to see you next stream. Have a great weekend, guys, and stay in profit.